Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, November the 20th. And we had a more exciting day today than we've been having for a while. If you got a chance to see my video last Wednesday, we were talking about trying to get over the 3,000 or the 3,100 level, sorry, and we finally kind of ripped through that, and we're on our way and had our first kind of pullback today. But it was really interesting because if you did not see the news today, we're going along fine. And then we had this big downdraft from 31.15 down to about 30.90. That's a pretty good sized drop there. And we had levels here. We were watching levels at 30.91 and hit it almost exactly. It's kind of crazy, in looking at some of these levels. That was a fib level, and that they just, come down almost to the penny. So hit that, and then we just started making our way back up. Just buy the dip, buy the dip, buy the dip. Higher, 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 like it never happened. This news was that the phase one China deal does not appear that it's going to happen this year like everybody was planning. Remember, some tariffs were supposed to come off on December 15th, and phase one was going to happen before that, and everything was going to be great and all high fives, and we all knew that was probably not going to be the case anyway. And and in reality, we all know that this probably is going to drag on for quite some time. But it is the the forward thinking, or I guess kind of like the guidance of which direction they're going and the momentum of the talks and that kind of thing. So at this point, we are still in buy the dip. This thing's going higher mode. I have been. Let me pull up a little bit longer term chart here. So I have been, let me go out even further. I have been a buyer of this really since off this low here. Buy, get long, be long, be long, be long. And I said many times, 3,100, that's it, I'm out, high five, that was great. I've had enough. And we just, we've kept on going. You see the little high up there at 31.27. And matter of fact, let me put the voodoo lines up here and I'll show you. It looks makes a little more sense. So we've got a voodoo line here, and in fact, let me go out a little bit further. And the reason that I was saying, 3,100 is right there. It's kind of behind that 3,100 right there, and we've been making our way up and making our way up. As the voodoo lines go, which there's a lot of calculations going to where these voodoo lines are placed. The fire line is the number one strongest, and number two is the tree line right here, the green line. So I thought we would fail off that, and that tree line is at 31.18, and we just broke above it, and then we kind of broke back down through it. So now we are in another critical spot, because if you notice, you see this? Now these are skylines, these little light blue ones here, right here. So we break above it and failed, not far, but failed a little bit. Came back up, we're going to rally higher, and failed, and then really, gave it up down here. Kind of same thing here. We rallied up here, went a little above it, and failed. A little above it, failed pretty hard. So are we going to do that? A little above this and fail, and maybe get back above it and fail, or get above it and fail. I don't know. No one knows that, right? But what I do know is that at this point we are in a strong momentum, bullish uptrend, etc. We all know that, and we should be expecting. Let me put some grab candles here, and I'm just talking about the S&P, and we can relate this to to everything else. Matter of fact, let me put the moving averages back up here. So we can expect this to most likely, again, people are buying the dip here. So what I'm looking for is this dip going to be a little shallow dip like this? You see these tiny little dips that come before the big one? There's another one right there. There's another one right there. And then, then we roll over. So we haven't, if you notice up here, we really haven't had any dip at all. So we could come back. It would make sense to come back. That's a 20-day moving average. There is a 50. We could come back there to, that's 20-day is at 3013. I mean, essentially 3,000. We could easily come back down here and still be in an uptrend. So that's kind of what I'm looking for. I'm going to keep reluctantly trading this thing bullish with some trailing hedging. I did take off some hedging today in our bias group. We had a downside put calendar. We took it off down here, and I will reset it on the next move up higher. We keep going, and I'll reset it higher. And also, I do have. We had set this a couple days ago, and we were at 31.27. Our expected move, now this was on Tuesday, our expected move on the week was 21 points, which gets us to 31.48. So, if we put a 30, I've got a trade up there at 31.50, a bullish trade for 31.50 on Friday. Now, I don't know if we'll get there or not now, but after this pullback, I don't know. But I think we still have a decent shot. So, bottom line, I'm trying to trade this thing higher with some hedging on the downside, and I think that makes the most sense. And again, you can do the same concept with every stock out there, because if you look at Apple and I don't know, on and on and on, many stocks are hitting 52-week highs and all-time highs and all that kind of stuff. And I'm doing the same thing. I'm trailing stops up behind them. I did that with AbbVie today. Fantastic chart, love the stock, etc. I did a little short on it right here, and so far it's working. Just thinking this is great, but it's stretched a little. The rubber band stretched a little tight, and we could have one. We could have a pullback like this at any point, and it could reasonably come back down here. Now, I said this in the room. I set this up in the bias room, and I set this up in the main room. This trade, if it pulls back here, I will ring the register here, and then I will become a buyer for the next run up here into earnings out here in January. So just I'm using that same concept with stocks as I am with the indexes. The only exception is the rut. So we'll flip over here to the rut real quick. If we look at the rut, this is a 1-year chart. The rut is made up of small caps. We look like, we were topping, and we're consolidating all along this same level. To me, this looks like it wants to come back down here, and we do another one of these kind of moves. That's what it looks like to me. It could break out, obviously, but the rut is not following the same pattern as the NASDAQ or the S&P, so be a little careful there. So, all that being said, continue to be nimble, of course, but continue to look to the buy side. Don't try to short this thing, get your head ripped off. Do some hedging and very selective shorting. Just keep tight stops and watch all that kind of stuff. But and I am going to look a little further out in time. December, January, February, and some of the hedging type things versus just like shorting the ES. I don't want to do that unless it's on a really small time frame, intraday like today, that type thing. But hedging hedging makes sense for sure right here, as extended as we are. So that is what I got for you today. Hope that makes sense and helps. And I will see you guys at the next update. Take care. Thanks.